Welcome to the Forex, and here we're looking at the US dollar, and it's still moving sideways across the 80 here, and we're looking for wave B here before we see wave C to the upside. It is possible that we've got this little A, B and C here and three wave swing here, so it's possible that the alternative B wave is here and we could move straight up from here, but otherwise we'd be looking at this as the A wave, the B wave and the C wave down to here in 5 waves, roughly the same length as this, bringing us down into 79.72, 79.80 area and then moving up from there. So this would be the same for the euro on a mirror opposite here, and basically looking for still looking for this rally here into 137.50 and possibly all the way up to 138, but I just want to stay within this block of supply here for the time being. So once the market gets back up above 137, then it really creates the buyers for that to occur. However, under that we'd need to be selling new lows, so selling a new low under this low here would be the right thing to do. You'd be trading in line with the trend and breaking into new lows here. So look, as it stands, we're still looking for that the little A, B, C here for the B wave. I'm looking for the C wave to the upside there, which should be about the same length as the A wave here. That's why I was thinking the 137.50 and the 137.72 there. So anyway, let's just sort of see how we go. But under this sort of area through here, then you need to be well, you need to be on that side of the market. The daily chart is deeply oversold still, so it's still got the sort of ability to snap this back up into the 138 area. So just be sort of mindful of that and prepared to stay flexible and be quick. So the Australian dollar's the one that's really moved overnight, and now this is where we originally were, and I think that I missed the video here yesterday after I made the video, so sorry about that. Yes, so not yesterday, but the day before we spoke, what we've been speaking about was basically looking down for this as wave A here, and then A and a B and a C for wave 2, and I think this is about where we spoke last time. So we were looking for a move down as wave C here into the 90, well, close to the 93 area here. But the RBA's comments have pushed it down further, obviously, and this count that we have here is valid until this low over here at 92 is taken out. Okay, so then the count that we have at that, if that gets taken out here, which is likely that it will, then we need to look for other counts. And then in terms of other counts, just in the bigger picture here, this is the weekly chart. We were looking for, and we still are, we're still looking at the possibility of looking for 5 waves up through here. So basically the 1 and 2 into here, as you can see, and the 3rd wave up here. So this whole correctional pattern here, we could consider this the 4th wave here still, and still a 5th wave up. But we also need to be mindful that this move up through here is counted as 1, 2 and 3, but it also can be counted as an A, B and C to the upside as well. So this is the other count that we've always had here, which was the A wave, the B wave and the C wave pulling back up to the 38.2 retracement level and then folding out from that point there. So this is a real possibility as well here, and seeing that move from the RBA yesterday, this strong move down, it really sort of brings that bearish picture into the fold, so to speak. So in a bit of a nutshell, we would be looking at this well, if this was a wave C coming down here for the big wave 4 that I was just talking about, then it would still be pretty much the same sort of pattern, and would be looking down as wave 1 and 2 and 3, and even as a bear market we'd be looking down as 1, 2 and 3 as well. But once we got the 3 there, we'd be looking for 4 and 5. So we're still looking for 5 waves down. the 92, I'll just remind us of this here, is the 92 the 2 is important. The 2 is always the pivot within group 1, in this case minor group 1, and the 2 as a resistance in the market, in the bigger picture, basically tells us that the top of group 1, the 93, is not going to find support and will be heading back to 90 at that stage. So resistance at 92 would put us back at 90, and obviously that would help us conclude that we're in a bear market as such. The other point too is that this market is likely to follow the S&P 500. So if the S&P 500 does move back to the 1800 and lower as a intermediate wave 4, then this is going to be on the same page as well. So let's sort of see how we go here. A couple of things here is that I've tried to pull this wave structure apart here, and that's okay, and we'll look at that in a moment, but I don't think it's the end. So we can pretty much assume that the market will, in its own way, work lower through here and will take this previous low out here. So the wave 1 count that we had up here and coming back for wave 2 is pretty much off the table, even though that's not confirmed yet. But looking at this structure through here, looking at this as down for 1 here, this is actually quite a reasonable, nice 5-wave structure in here, even though it looks a little bit tricky, but it counts nicely as 5, so we can conclude that's wave 1 and remove the A wave. Nice 3-wave counter trend for wave 2 here, and we need to start counting down here, and in counting down here, so we can conclude this is wave 1 down to here, an A and a B and a C for wave 2 to here, and then we're in wave 3 coming down through here. Now in wave 3 there's going to be series of 5 waves. There's going to be 5 waves in there, so there'll be 5 blue waves in here. So I've got, as you can see, wave 1 there and wave 2 here, and the market really does extend out quite sort of nicely here in terms of, in blue wave we're in black wave 3, we're also in blue wave 3, and there'll be 5 waves in blue wave 3, and that's 1, 2, and the 3rd wave is all the way down to here, and we're looking for a 4th wave to pull back into this area through here, and then there'll be wave 5 of the 3rd wave here, then wave 4 pulling back up to wave 4 over here of 1 lesser degree, and then wave 5 down through to here, just to give us the low of wave 3, the black wave 3. So there's still, there's a fair bit to move in through down here, but as you're moving into the 92 here, starting from the 92.30, it's going to get a bit bouncy, because what you see is not what you get, because now we've gone, these are all like black wave 3, blue wave 3, golden wave 3 here. So we're in a whole suite of wave 3s, wave 1s and 2s and 3s to the downside here. But now we're going to be in a whole series of waves, 4s coming into play through here. So this is all going to get pretty sort of choppy around here. So in the bigger picture, as a bearish trade, a long-term bearish trade, what we would be looking for, if I can bring this back up here, this will do the trick. So we would be looking for wave 3 to pull out here. So if I just took this as wave 1 here, wave 2, and say this is wave 3 here, then there'll be wave 4 and wave 5 here. So this is just this wave, black wave 3 here. Then we'd be looking for the counter trend here, okay? Once we've got the counter trend, then we'll be looking to go short from here, if confirmed at that point. This is where we would do it, in this structure here. So we'd have to wait for the 5 waves down, the 3 waves back up, and then we would look to short it down that side, and that would take us pretty much all the way back down under 87. So quite a long-term trend down there, if that's going to be the case. We don't know that yet. I mean, there's quite a lot of reasonable sort of volume selling yesterday on this particular move down, but let's just tinkle with it for a little while and see how we go. Okay, the other interesting market, I guess, is the Euro Australian that we've been looking at. And yesterday, yeah, we were basically counting on the daily here that 1, 2, 3, 4, and 5 down to here, and we're putting the wave, because we've been counting 5 waves down here, and we're putting the wave 5 in here and the wave A here, and looking to buy on 147 here. With that in mind, I was just mentioning that it is a corrective move because we've got 5 waves down here. Then we need to look at this as an A and a B and a C, coming back to the 5061.8 retracement level here as wave B here. So yeah, look, this has got further to move up. It's currently at the 50-60% retracement level of this move coming down through to here. So it will, spend a bit of time in this little area through here, but looking at the price here at 148, we can pretty much work with this through here. So the way I was counting this to the upside is this here. So looking at wave 1, wave 2, and wave 3 a little bit higher up through here, and then wave 4. So looking at the first high above the level here at 148, and then coming back down. So if you're long at 140, well, basically above 147 there, as mentioned yesterday, then you can hold through here, and we should get up to the 49 and probably even the 50, but we'll count that a bit further. But yeah, this coming in here a little bit, this is how it counts on the intraday. So looking at all this as here as wave 1 here and wave 2, all of wave 3 up here, 4 and 5. So we'll be looking for 1, 2, 3, 4, 5. So it could probably go a little bit higher up through to here. So you can go long again off the 148 here if you're long at 147. But there can be swings across the 148 here within group 1 and group 2. If support is found on 148.30, then you're going to continue to move up from that point there. A tested support, not just trading above it. Right, the pound yen here. I mean, realistically, this wave A here, wave B here, and wave C here should be down at this area down through here somewhere. But as it stands at the moment, we've got a little 5-wave structure here coming into the 170 area here. We can see from these bars here that it basically is consolidating here. So it is corrective and it should move down further. But just sort of drilling in there a little bit, it does count for a little. I wouldn't worry too much about this wave C here or this one really. But basically we've got this little structure down through to here. And look, pretty much if I just drill in here a little bit further, it's got to go in a bit further again, just bear with me. While the market's above the 170.50 here, then it's basically a bit positive, so just got to be a little bit careful about that. So any short trades you take would have to be under here. And it can push up from here. In fact, it's got a little 5-wave structure here, so it's likely to come back and test here, but it can push higher through here. So support on 170.72 there would be a long trade. And this is a bit the same for the euro yen. So basically these markets are in bear markets, so they're just looking for bear market rallies. So it's the same with this one here. The wave C should be down here in terms of an A and a B and a C wave through to here. So, but at this stage here, it's got a possible short-term low in here, and we've been talking about it for a little while in here, and it's still there. And I'm just the 1 hour chart here. We were counting through here yesterday. It's not like a great trade or anything, but what I was looking for here on the 5-minute chart here from this low here is you can count 5 waves up through here. We've got the 1, the 2, the 3, the 4, and the 5 here. So we've got a 5-wave structure here on the 5-minute chart. So we should see some sort of ABC here and then further upside there. So I think this little 5-minute chart's the important one. So you could work with that if you wanted to and keep the stop under the 138.63 here would be reasonably safe bet. Alrighty, well, that's it, I think. So, all good. Okay, cheers.